Just check, making sure we're not live.
Yeah. Thanks. All right, everyone. Okay, sorry for the delay. There was a little bit of a hiccup. Right now it's 3:02, and we're going to get started. Today, we are really excited, okay, to continue our Enterprise Blockchain Week. What is the program that we have? This is a program, okay, that started last week. 7 days, 7 different technologies, and we are right now in the middle point. Okay, in last week we covered 3 technologies. We started with Quorum, then we talked about Anchain, and we also covered Alibaba Cloud as a blockchain as a service. Today, okay, we are very excited to go into a new kind of to discuss a new kind of technology called Hashstacs, and then over the next 3 more days, we have 3 more days to go. Okay, we'll be covering Hyperledger, R3 Quarter, and Hadra Hashgraph. Just a reminder to everyone, okay, to every time you attend this session, do stay until the end for instructions on how to receive a very special piece of token called a unique proof of attendance, which this token you can actually claim and put it will be deposited into your cryptocurrency wallet of choice. And what happens, okay, is what this token basically is instead of giving you a traditional certificate of attendance, this token actually is recorded on a blockchain, and you can show to your friends or to your colleagues that at so and so a particular date you actually attended this education program, and this is what you learned. 1, 2, 3, 4, 5. So it's really cool, and I hope that you guys like it. But do stay until the end for the instruction on how to claim your unique proof of attendance token. The Enterprise Blockchain Week is brought to you by 5 different partners. The first one being Blocklime. Blocklime is a local blockchain developer and training house where they have trained over 1,000 developers over the last 3 years. Another of our partners is TE4P. The TE4P stands for Technology Entrepreneurship for Penangites. So they are from our friends from the north, okay, who run a lot of community events to support startup entrepreneurs in the technology space. Another of our partners, okay, include iTrain. iTrain delivers a suite of very, very varied and broad range of training programs from soft skills, hard skills, and also in the technology space as well. We're also supported by Access Blockchain Association of Malaysia, which is the association that has been very, very instrumental to grow the blockchain industry over the last 3 years. And last but not least, you have yours truly. My name is Jason. I'm from Bitcoin Malaysia, and I'm your host and moderator for this entire 7 days. Combined together, our mission is to help 50,000 more Malaysians to enter the blockchain industry by providing a safe place, neutral, and an easy environment for you to learn what the technology is, what the technology is not, so that you can be able to differentiate what is real and what is fake in a space which there's a lot of noise, there's a lot of hype, there's a lot of misinformation, and there are a lot of scammers as well. By being able to empower you with the right kind of knowledge, then you can actually put your focus into capturing the real opportunities, which is really, really this high growth sector that is blockchain. Part of our mission also is to help you to find remote work and alternative income in an industry where it's quite common in the blockchain industry to operate in global teams, remote work remotely, and especially at this time when a lot of people's jobs are at risk. Okay, this Enterprise Blockchain Week is to help you to scale up so that you can actually look for more opportunities and income generating opportunities in this space. Last but not least, okay, by creating a fresh supply of people who understand, okay, about the technology, they are well educated and are more mature. Thus, okay, we are able to attract more blockchain projects, well-funded ones, reputable ones, to come to Malaysia to find local user adoption fans and champions. So over these 7 days, what we hope that all of you will take away are 5 things. The first thing is you will walk away with strong blockchain fundamentals. You will know what blockchains are, what blockchains are not, when to use a blockchain and when not to use a blockchain. You will know what the difference is between a public permissionless blockchain like Ethereum and a private permission blockchain like Quorum, Anchain, etc., etc. And I think that by now on this 4th day, you might already be quite used to this already, which is a good thing, which means that you're actually understanding the space much more better compared to what 99% of these the people that are still new to the blockchain space. In these 7 days, we have invited a lot of special guests to basically give you as many use cases as possible. Last week, with Quorum and Chain, you saw use cases ranging from medical in the healthcare industry in terms of sharing data between hospitals, so that when you take a blood test from this hospital, you don't have to take another blood test in another hospital and then incur more costs, etc. We also saw use cases in the supply chain. There was one of the biggest takeaways was the supply chain verification model that comes with mining. So it incentivizes the users to actually participate in verifying the correctness of data, which is really, really cool. So imagine like Starbucks, you want to say that you verify that the quality at this particular part of the supply chain was good. That can be recorded on the blockchain. It can be rewarded for that. That's really, really exciting. And last but not least, by having this knowledge over these 7 days, you will then have a wealth of information where you can now know how do you get started, what applies to you, what is suitable for your industry, for your company, for your enterprise, so that you can begin an experiment of your own and start enjoying the benefits. So last week, we talked a lot about healthcare, we talked about supply chain, we talked a lot about a lot more on the supply chain, like luxury good verification. But one thing that we did not cover last week was the application, in terms of capital markets. So today we have a very special guest. This is an article that I took from last year. In 2019, the Gibraltar Stock Exchange launched listings of blockchain-based securities, and from ranging from corporate bonds, convertible bonds, asset-backed securities, derivatives, open-ended funds, closed-ended funds. And this was developed, this prototype was developed by a Singapore-based blockchain firm, Hashstacs. And we have the senior manager of strategy, Chuan Ji Lim, with us today. Chuan Ji, are you here? Can you hear us?
Yes, I can.
All right. So a very quick introduction, to CJ, right? CJ is someone, who I met personally, about back in 2018 at I think the first time I saw CJ speak was at a crypto conference, held in Penang, and it's been a long time since I last met CJ. CJ, how have you been? Before we go into the content, 2018 was such a different time. To me, it was such a different time from today. Was that so many things has changed, in terms of the sentiments, in terms of the technologies. How are you, and do you feel the same?
Yeah, so I'm good. Trying to stay as positive as I could in this kind of current environment. Obviously, in the past kind of couple of years, you always notice that I'm in Malaysia quite often, probably once every 2 to 3 weeks. So it's definitely been a while since I've been to Malaysia, or at least when I used to be traveling every month, and now being stuck back in Singapore. You could imagine that this is probably a bit of a damper for us. Nonetheless, we are still continuing with our project deliveries, so hosting our project deliveries offsite, some of which including those in Malaysia, for example. So I guess kind of on a personal basis, that has been how we have been so far. In terms of the sentiments, yes, I think it was quite a long time since we first met in 2018 in Penang, actually. So I'm actually quite surprised that you still have those pictures of the very fun times that we had back then. I think that the sentiments has slightly shifted. Since then, you also recall that back in 2018, I was also talking about that if crypto was a new asset class, then there would still be the kind of need for this to be an institutional grade asset class can't be something that just kind of, as you mentioned, a public blockchain, for example, is it something that is truly acceptable if crypto was supposed to become truly mainstream? Since then, since 2018 to kind of right now, right, we have still been very much on the institutional track, be it whether in terms of whether we are talking about crypto or in terms of whether we are talking about a security, a security onto the blockchain. So in this regard, I still firmly believe that crypto or be tokenized securities, etc. The sentiments, at least to me, still remains the same. That we still believe that when it comes towards putting things onto the blockchain, it should still be very much a kind of institutional or very much wholesale focus.
Okay, so we're all really excited, okay, to hear your sharing, okay, about what Hashstack is, okay, what do you guys actually do, what have you guys done, okay, and the use cases of of blockchain in the capital markets. Are you ready to share?
Yes, definitely. So I've shared my screen over here. I'm not sure whether everybody else can see it. Yes, there you go, perfect.
I'm going to put it up right now.
Yes, I see it. So first and foremost, thank you very much, Jason. Thank you very much, Harpreet, for inviting me onto this webinar. I think it's an excellent initiative that you have enacted, given that we are all kind of stuck back home at the moment. So this is actually an excellent opportunity to actually invite the audience to learn more about blockchain, which I think is one of the key objectives that you have over here. So I'm Chuan Ji from Hashstacs. We are a Singapore fintech development company. We are in the business of providing enterprise blockchains for the capital markets. In my current capacity, I head the strategy department for the company. So I look at how market developments, how regulatory developments in other parts of the world, how do they affect the company, and what are some of these opportunities that we can tap on. I also look into the overseas expansion, so areas or new geographical markets that we can enter. One of which definitely is Malaysia, which we have been operating in for quite a while. And I also run a few of the strategic projects for the company, some of which I'll be able to share upon later. I'm not very new to the Malaysian markets. We have been engaging with the financial institutions since 2018, on a few different occasions, including right now, we actually have a few projects with the various financial institutions over here. And hope that some of these projects are those that we can share upon subsequently later. Throughout these past 2 years, I think I've been pleasantly surprised at the amount of progressiveness that we've been seeing in the Malaysian markets. So for example, with the enactment of the digital asset guidelines, the digital banking guidelines, etc., as well as the various initiatives that the capital markets have actually enacted. So we think that this is something that's highly exciting, something that's highly progressive. So I do look very much forward to when this COVID-19, when the travel lockdowns would kind of be reseen, such that I can then continue on the work that I've been doing in person in Malaysia instead of having all of our project deliveries offsite. So I've prepared a very short summary slides over here. It outlines very much who Hashstacs is, what's our approach towards implementing blockchains for the capital markets, as well as some of the projects that we've been involved in, and what are some of the kind of key findings that we have over here. So what I hope is that there will be actually an interactive Q&A. So as and whenever I make some comments over here, if it's something that you agree with, or if it's something that you think that doesn't make a lot of sense, please do voice out your views. I do hope that this would be more of a two-way conversation rather than a one-way presentation. Okay, so let's get started. So a bit about Hashstacs, so you know who we are and what we do. So Hashstacs, we are a Singapore fintech development company. We are in the business of providing enterprise blockchains, so permission blockchains for the banks, for the stock exchanges. We've built our own proprietary blockchain technology. We call it the STACS blockchain. We've built it since 2017. It went live in 2019. And over the past year, we have deployed the STACS blockchain on a few different projects, especially throughout ASEAN and also in the Europe region as well. And some of these projects I'll be able to share on subsequently later. As a company, we are very much focused towards the capital markets aspects. So we don't touch, for example, cryptocurrencies. We don't even touch, for example, payments, but really very traditional financial instruments in capital markets. Things like your bonds, things like your structured products, for example. Can I tokenize these products, put it onto the blockchain, put it onto the STACS blockchain, and manage the entire trade life cycle of these tokenized bonds, tokenized structured products, for example? So that's very much a key part of what we focus on. Some other aspects of the company, for example, we have deployed projects for exchange clearing and settlement. We've also deployed a few projects for asset management. So for example, how can we have the trade reconciliation of exchange traded derivatives on the STACS blockchain? Now, as a company, we have slightly over 50 people. I think 54. We just onboarded 4 new people today in this climate, which isn't a very easy to do, doing onboarding. So 40 of us are on the technology side. So on the blockchain side, guys are blockchain developers, front-end developers, back-end developers, project managers, and business analysts. And then the remaining kind of 14 of us, we are more towards the business side. So most of us do come from the capital markets, and that does give us quite a lot of experience when engaging with some of our partners and clients. Now, our belief is that a lot of the financial institutions, as slow as it is, they are actually starting to adopt blockchain technology. And this is not just our view, but if you look at the next slide over here, you'll see that around the world, right, in both the developing countries as well as the developed countries, the financial institutions are all using blockchain technology, all for various reasons. So for example, in the developing countries, the stock exchanges and the financial institutions, they have the belief that, if they stick to the current traditional technology, then this would never allow them to actually compete on a level footing with the more established counterparts that have probably, 4 or 5 decades of head starts as compared to them, right? Mm-hmm. So instead, they are to use new technology. Could they actually leapfrog these decades of what we call lost development, and such that they are actually able to compete on a level playing ground vis-a-vis their more established counterparts? So if that happens on the developing countries, then on the developed countries, right, you also see that the stock exchanges and the financial institutions, they are not stopping there. They are actually using new technology as well to get an additional edge, to be closer to their clients, to give them more kind of value-added services over here. And one of the key things that we have seen over here is that initially, right, when the financial institutions, when they first started using blockchain, probably back in, I guess, 2014, 2015, right, most of these institutions were mostly concentrated towards the West. So meaning to say that a lot of the initial blockchain activity in capital markets were towards the Americas, towards Europe. But probably in, I would say around 2017, the start of 2017, up to, I guess, a conflection point in 2019, the midway of 2019 last year, that's when we began to see that Asia especially began to take on a lot more interest in capital markets. So we then talk about things like, for example, cash tokenization, payment tokenizations, whereby these central banks actually come forward and say, let's issue a central bank issued digital currency for whatever reason. So you have quite a few different examples over there. You have, for example, the Singapore MAS, for example, which are some of the projects we are involved in. We've got, for example, the National Bank of Cambodia. And I guess the most prominent one would probably be the PBOC in China. So that's one aspect of what happens on more towards the payment side, but also towards the asset tokenization side, towards securities tokenization. We gradually began to see that this has been a topic of increasing interest since 2019. So we talk about, can we take a traditional asset, a traditional financial instrument, put it onto the blockchain and manage the entire trade life cycle of this instrument. So those are projects that we began to see take up a lot more interest, especially in Asia, especially in this part of the world. So some of these projects we're actually quite familiar with, being that we either interact on a constant basis with some of these participants, or in other cases, we ourselves, we are actually directly involved as the technology provider for some of these projects, which I'll share on subsequently later as well. Now, in terms of the technology itself, right? So Hashstacs, what we provide is we actually provide 2 different types of blockchain technology. So the first is what we call the STACS infrastructure, the STACS blockchain infrastructure. As I've mentioned, is a proprietary blockchain technology. We developed it since 2017. It went live in February of 2019. And subsequently, we have deployed it on quite a few different occasions for a variety of banks and stock exchanges. It is first and foremost designed for capital markets usage with core principles of confidentiality, flexibility, and governance. But throughout the 1 year that we've actually deployed the STACS blockchain successfully for a variety of projects, we soon came to the realization that, at this point of time, right, what the technology itself is slowly moving from nascency towards an advanced state of technology, towards core banking grade technology or enterprise grade technology. But nonetheless, right, at this point of time, and this is probably a view that will actually hold true at least for the next 2 to 3 years, we believe that actually most of the financial institutions are not ready to actually adopt a blockchain yet. So I'll put a caveat over there that while they're not ready to actually purchase and own outright a blockchain technology, but that said, they still very much want to, to gain the benefits of a blockchain without actually having to own one. So that is where we began to came out with a new product line, which we call Settlity. It is actually a play on the word settlement finality. And the whole purpose of Stability is how can Hashstacs own and manage a blockchain, but provide it as a managed service for other financial institutions to actually come in. So meaning to say that they are able to manage and trade a digital financial asset on the blockchain with the full benefits of the blockchain, but they don't actually have to own the entire blockchain infrastructure. So that's something that we've been building up and an extension of the STACS blockchain infrastructure, and we do expect to launch it in a couple of months in July of this year.
Cool.
Now, a bit about the STACS blockchain technology, right? Before I go into some of the other projects that we've been involved in. So the kind of three main features of STACS blockchain is that it's first and foremost designed for capital markets usage. We've co-developed a variety of use cases together with the financial institutions. Now, we always like to claim credit for coming up with these use cases, but to be honest, most of these use cases that we eventually come up with is an end product of a lot of hours of co-development work together with the financial institutions, a lot of co-design work with the banks and the stock exchanges. One of the things that's quite unique about the STACS blockchain is that there is actually a high level of willingness as well as ability to actually integrate with existing financial platforms. And the key reason for this is that the STACS blockchain is, at the end of the day, it is specifically designed only for capital markets. So vis-a-vis other more kind of general purpose blockchains, we don't actually see that there's a need for these general purpose blockchains to actually integrate with existing financial platforms. But whereas in our case, we've actually taken the preemptive step of integration. So for example, on the bonds, on the treasury management systems, we've been looking towards integration with Murex, with OMJO, with Bloomberg, Vcon, etc. For the trade treasury management systems, and also together with SWIFT, for example, for the infrastructure payments railways. The second thing that I want to highlight for the STACS blockchain is that at this point of time, we are already production ready. We have deployed the STACS blockchain on quite a few different occasions, ranging from POCs to small MVPs, small scale live transactions, as well to even a full deployment. And what we have over here is that we have both the underlying blockchain technology and also very basic front-end GUIs. So for example, for people like Harpreet, for example, who comes from a coding background, Harpreet, for example, might be able to actually interact with a blockchain through command line interfaces. But for most of the capital markets participants, most of them actually don't come from a coding background. So if you were to ask them to actually interact with a blockchain via command line interface, that's not something that is really acceptable for them. So in lieu of that, we've actually created very basic front-end GUIs that allows the users to actually interact with the STACS blockchain through the usage of the front-end GUIs. The very last thing that I'll point out is that we have an existing ecosystem of participants in live transactions, and most of these banks or stock exchanges, they actually participate in more than one of our projects. So in various instances, they'll actually take on different roles. For example, in one of the projects, you can have an investment bank taking on the role of the bond arranger. In another case, the investment bank could actually be a custodian or perform the role of a security services function in that project. So our view is that the technology stack of tomorrow, we actually see that there'll be 4 very distinct technology stacks over here, and there wouldn't be actually one company that's actually able to dominate these 4 different technology stacks over here. So the first is what we think of as the application layer. So these are where you have your traditional financial platforms, things like Murex, your OMJOs, for example, or Aladdin for the asset management use cases. And these application layers, they have to interact with the smart contract layer. So here you have your Solidity smart contracts, you have your Java smart contracts, or your Demo smart contracts. For example, the smart contracts then interact with the blockchain layer. So this is the part that Hashstacs we are involved in. We are very much heavily focused on the blockchain layer. And the blockchain layer then subsequently has to integrate with the infrastructure layer. So with your SWIFT connectivity, with your RTGS systems, your security settlement systems, etc. So our view over here is we are not looking to actually overhaul the entire financial markets infrastructure, because if you were to actually take that view, right, it will be quite unrealistic. It wouldn't really be cognizant of the fact that a lot of sunk costs, a lot of investments has actually went into the existing technology, and most of this technology, is already pretty efficient. So whereas the entire 100% of this existing financial markets infrastructure technology, they might not be fully efficient, but I would say about 60 to 70% of this FMI is already pretty efficient. So where we are looking at is, can we migrate those non-efficient parts, this 30 to 40% of the financial markets infrastructure, migrate it to the blockchain, but with a view that there must be connectivity between these 2 different layers over here. So this is the view that we have taken over here. So we have quite a few different projects across pretty much focused on ASEAN, but with a bit of connectivity to Europe. Our view is that can we then subsequently connect all of these different projects that we have on the STACS blockchain together to form a hyper-connected capital markets on the STACS blockchain. So on this page over here, this is where we have some of our existing projects. There is 11 projects with 21 different financial institutions across 8 countries. This is simply what we have done only in the first year, since 2019 to probably to right now. We are actually delivering on some of these projects. So it actually varies quite a wide perspective, but generally, we have a very large focus on trade life cycle management. So for example, can I take a bond? Can I take, for example, a structured product, tokenize it, and manage the entire trade life cycle of the bond or the structured product onto the blockchain? We have some projects that, for example, focus on trade reconciliation. So for example, can I reconcile exchange-traded derivatives, exchange-traded derivatives trades between an asset manager, between an executing and clearing broker, as well as their back office custodians using the STACS blockchain. This is actually a very big industry-wide project that we are doing, called Project Mercury, in Singapore. We of course have one part on payments and also on exchange clearing and settlement, some of which Jason spoke about previously at the start. So for example, Gibraltar Stock Exchange did use their initial prototype and is still using our prototype for going towards full deployment on the STACS blockchain. One project that I'll highlight is on the integration with central bank issued digital currency. So this is the project that we have done with the MAS in Singapore, MAS being the Singapore regulator. So for those of you who are familiar, Project Ubin is the equivalent of the Securities Commission's Project Castor in Malaysia. Although, of course, I do have the biased opinion. Being a Singaporean, you know that MS Project Ubin is probably slightly bigger than Project Castor in Malaysia. So we did do one integration with the MS Project Ubin. We were the technology providers for the latest phase, and I'll share a bit on this project subsequently. The very last project that I'll just touch very briefly on before I talk about the more in-depth use cases is actually on Project Kampong. So Project Kampong is a very interesting project. Interesting in the sense that for all of these other projects, right, on bonds, structured products, trade reconciliation, exchange clearing and settlement, all of these projects have all been fully deployed already. So meaning to say that we actually have deployed the entire STACS blockchain for the various financial institutions. Whereas for Project Kampong, it's a bit different. At this point of time, Project Kampong is still a very preliminary project, is still in a research phase. And essentially, we are viewing Project Kampong from a social inclusion angle. So we are collaborating with 3 different institutions, with the University Utara of Malaysia, with the Islamic Institution of Banking and Finance, and also the Rochester Institute of Technology. And we are looking at home ownership for a start. And we are seeing that, can we actually view home ownership from a social inclusion angle, from an Islamic finance angle? We need to say that right now, right, if I were to purchase a home, for example, how I go about to finance this home ownership is that I'll approach a bank. Now ask the bank to extend me a credit card so that I can have, for example, a mortgage. A debt-based mortgage actually pays for my house in lieu of the money that I don't have, right? So home ownership at this point of time is still very much focusing on a debt-based mortgage model. Using new academic research as well as the usage of new technology, we are seeing, can we actually shift away from a debt-based mortgaging approach towards home ownership, towards an equity-based ownership approach for home ownership? And this will actually help to help with accumulation of wealth. It will also help with taking a shared equity approach towards home ownership. And this very much falls in line with the narrative that Malaysia has, of that right now it is a very much middle income country that's looking to move towards the next step of being a high income country. So very interesting project, but at this point of time, still a very preliminary research project.
Can you elaborate a little bit further on this? Because I think that this sounds one of those things which sounds quite new. Okay, what is the difference? Okay, we are familiar with the debt mortgage, but what is the equity mortgage? How does that work?
Yes. So one of the key challenges that I would say we face towards a debt-based mortgage is that what happens, right, in times of crisis, in times of stress. So very much similar to what's happening in the COVID-19 situation right now, right? So this was an idea that first came about as a result of the great financial crisis in 2008. And back then there was a city in America, right, that actually looked towards this of, can we shift away from debt-based financing towards equity-based financing? And the main problem that they're trying to solve over here, right, is that the moment that you actually forward on your existing mortgage, right, then you are forced to, if you focus on your debt on your mortgage, then you're actually forced into bankruptcy. And the moment that you're actually forced into bankruptcy, right, it actually creates a negative downward spiral. Because once you're actually in bankruptcy, right, then there's a lot of things that you can't do. For example, you can't set up a business. You're required to pay back a sum of money to your financier at the very start of the month, for example, can't leave the countries. So there's a lot of negative stigma over there. There's a lot of constraints the moment that you actually enter into bankruptcy. So that was actually one of the key reasons, right, why we actually wanted to shift away from a debt-based financing model towards an equity-based financing model. So meaning to say that in this case, right, the financier, the bank itself actually doesn't extend a loan over to you. Instead, they actually own a part of your property. So meaning to say that they actually own equity in a property. And then every month, once you have your salary that comes in, it goes in your accounts. Straight away, the smart contracts actually, based on what you have already pre-agreed together with the bank on your financing model, you take part of this salary and exchange it for the equivalent equity. So that is very much the over here. Again, most of these, why I say that is very much still focused on the academic realms is because this is a model that was first brought up as a result of the great financial crisis in 2008. So we do actually see that there's actually a bit of linkages between the GFC crisis about a decade ago as well as the COVID-19 situation. So this is something that we hope, as much as we don't like to say it, that we don't really like the COVID-19 situation, but perhaps because of this situation, it will actually incite a bit more discussions towards Project Compound. Okay. Now I'll move on into some of the more in-depth use cases that we have. And starting, of course, first with Project Ubin in Singapore, which is the, I guess, more well-known project. So Project Ubin, as some of you might know, is actually the Singapore regulators' flagship project for putting digital currencies and securities onto the blockchain. So in Singapore, there's only one regulator. There's only a central bank. Whereas in Malaysia, for example, you have the Securities Commission and also Bank Negara Malaysia. But in Singapore, they actually merged this function together. So Project Ubin started out by the MAS. It's a 5-phase. There was 5 different phases. The first phase looked towards how could the MAS actually take a Sing dollar and put it onto the blockchain. That itself, as silly, as basic as it sounds in the world of 2020 right now, was actually a landmark project that was first been undertaken by a central bank back in 2017. So that did incite quite a lot of excitement, even though the kind of function of taking a Sing dollar and replicating that Sing dollar onto the blockchain was something that was actually quite new back in 2017. In phase 2, so building on the digitalization of the Sing dollar, the MAS look at can they have domestic interbank transfer using that digital Sing dollar. So MAS talk about, for example, can you have your RTGS systems, your real-time gross settlement systems onto blockchain? Could you, for example, have your liquidity savings mechanism? Can you have your grid lock mechanisms all being operated on a set of business logic that's been pre-programmed onto these smart contracts? So phase 2 was actually quite a very interesting project, at least in my opinion. It was the most innovative project on the other 5 different projects. Phase 3 was when we first talked about a security. So in phase 1 and phase 2, the narrative was very much on payments, But in phase 3, that was when the Singapore Stock Exchange was actually involved, whereby a security was put onto the blockchain, and a buyer could they actually take payments that's also on the blockchain and buy this tokenized security that's on the blockchain. So that was the first aspect of both having a security as well as a payments on the blockchain. Subsequently, in phase 4, there was a extension of phase 2, but instead of only looking at it from a domestic perspective, the MAS collaborated with the Bank of Canada and the Bank of England to say, can we actually have cross-border FX remittances across 3 different jurisdictions? So that was phase 4. Now, then we enter phase 5, and phase 5 is interesting to us for a different reason. So whereas we say that phase 2, right, was interesting from an innovation perspective, phase 5 was interesting to us because it was meant to go operationally, like technologically live. So what happened over here is that the MAS has a blockchain-based payments network. Okay, so MAS, I think there's a bit of yes, I can move this away. So MAS in collaboration.
We can hear you.
Yeah, MAS in collaboration with Temasek, which is the Khazanah equivalent in Malaysia. So MAS in collaboration with Temasek as well as JP Morgan created a payments network that's built onto the blockchain. So that blockchain that was used for this payments network was actually Quorum, which I believe we had some guys talking about it last week. So the entire Ubin payments network, this middle portion over here is entirely based on the Quorum blockchain technology. So on one side, being a multi-currency blockchain-based payments network, you had the central banks or the commercial banks actually pumping in the currencies. So for example, a digital Sing dollar, a digital USD, for example, which is very much in line with JP Morgan's JPM coin. We have, for example, Thai baht, Canadian Huni, etc. Because at the end of the day, this is not a single currency payments network. It is a multi-currency blockchain-based payments network. Okay, So on one side, you have the payments coming in, and then on the other side, you have a variety of different use cases. So you have use cases, for example, for insurance. You have, for example, use cases on digital advertising, and all of these different use cases. The only reason why they were actually hooked into the Ubin's payments network was simply because they needed a payments token for a settlement mechanism. Now, where Hashstacs came in, we were a bit more specific. We were not very much focused on general use cases. And instead, what we did was that we were focused on providing the STACS blockchain as the securities ledger. So meaning to say that the payments ledger is on the MS Ubin network on Quorum. The securities ledger was actually on Hashtags on the STACS blockchain. So we were looking at bonds. We deployed structured products, and we had a digital custody use case over there, working with 5 different investment banks to integrate together with the MS Ubin's payments network. So that, in a kind of very broad, high-level summary, was what we did for the recent Project Ubin Phase 5. Now, I would love to share at this point of time a demo on the actual integration, how a user will actually use the STACS blockchain to issue a security onto the STACS blockchain, and then subsequently use the Ubin's payments network to actually purchase that security. However, at this point of time, the Ubin's payments network has been taken offline since the mid of last week for a bit of upgrading on the Quorum side. So apologies that I can't actually show that. I do have a video link of what we presented at the Singapore FinTech Festival. So I'll probably share that link with Jason and Harpreet, and we can then disseminate this video link subsequently. Now, some of the other
cool. But can you share a little bit? Okay, can you share a little bit about why? Okay, phase 2 was you were mentioning earlier that phase 2 particularly was a very interesting from an innovation point of view.
Yes. So the core assumption behind an RTGS system, right, is that this RTGS system needs to be maintained by a central bank. So for example, in Malaysia, the equivalent of this real-time gross settlement system is what you call rentas, the rentas systems, or FAST network, for example, in Malaysia. So FAST is more for retail payments, as rentas is more for wholesale, for institutional payments. Now, RTGS systems have always been something that is sensitive. Sensitive in the sense that if the RTGS system goes down in a jurisdiction, right, then essentially the entire network has been crippled, because then you can't have your institutional payments for your payments clearing and settlement, right? So because of that, RTGS systems have always been maintained by a central bank. Now, the premise here, right, is that if the central bank were to be the sole entity that's actually governing this RTGS system, right, then it also means that from an operational perspective, the MAS is taking a lot of operational expenses that's actually involved in maintaining this network. It also means that because of this, because the MAS is not willing to work beyond 5 p.m. or 6 p.m., that's a joke, by the way, don't quote me on that. MAS actually does work very hard. As a whole, the operational aspects of MAS, they will shut down their RTGS around 5 p.m. or 4:45 p.m., for example. So because of that, payments clearing and settlement is actually constrained to a certain set of working hours. Now, the assumption then is that could the MAS then deploy a blockchain-based system to replace their RTGS system? So make no mistake about it, MAS still owns and operates the entire RTGS system. But in this case, right, MAS is actually not the kind of bottleneck that actually dictates whether a payment clearing and settlement can actually happen. So can we then shift away from a kind of 9 to 5 model to something of a 24/7 business model? Now, again, whether there is actually a need for a 24/7 operational model is something that we have to further explore, because in certain cases, it actually doesn't make sense for the capital markets to remain open for 24/7. If I talk about things like market harmonization, for example, if I talk about things like, for example, letting markets to settle down, especially in times of crises, especially in times of where there's a lot of stress in the capital markets, you don't actually want the capital markets to actually be functional for 24/7. You want to have some cooling measures to come in. But nonetheless, from a technology perspective, right, that was why phase 2 was so interesting. Because in this case, right, MAS would no longer be actually the bottleneck that actually does all the payments, clearing and settlement. And in this case, you can actually extend the business operating hours of a real-time gross settlement system. So that to me was actually one of the reasons why I felt that phase 2 was particularly innovative. And from that aspect, a very interesting use case. Okay, so
really cool.
Some of our other use cases. So one of the use cases that we initially started with was on bonds, or managing the entire trade life cycle of a digital bond onto the blockchain. And why this was something that was a huge market fit for us, right, is that if you look at different asset classes across the board, bonds, derivatives, equities, for example, right? Equities as a whole is pretty efficient, to be honest. Equities right now is pretty efficient. There's a lot of investments, there's a lot of efforts that have went into the existing technology that powers equities trading. On the other hand, for bonds, it's still a very much paper process. There isn't a lot of electronification of bonds. So whereas bonds, right, is actually a much larger notional amount as compared to equities, but actually the amount of technology investments into bonds platforms have actually not been a lot. So because of that, we actually saw that there was actually an opportunity for us to actually enter into the bonds market and make it a lot more efficient. So some of the considerations when we work with an investment bank, right, to issue a bond, for example, some of the considerations that I had would be, for example, what is the risk profile of an issuer? So again, in this case, right, we always work with a bank, we always work with a stock exchange. We don't Hashstacs as a technology provider, we don't actually issue that bond because we don't have a license to issue a bond. So what we will do is we will work with an investment bank. The investment bank will have its issuer. So in this case, for example, let's say if Starbucks in Malaysia want to issue some bonds, right? Starbucks will then issue the bond by itself. They'll actually approach one of the investment banks like Kenanga, like Maybank, like CIMB, for example. And then the investment bank itself will actually help them to issue some of these bonds. And some of the considerations that the investment bank would have, right, is what is the risk profile of Starbucks? Are they confident that the bonds that they help Starbucks to issue, is it something that can help them to sell out? This by itself is something that is non-technology related because this is the risk profile of a company. It's not something that technology can actually affect. But other things, and in decreasing order of importance, is what is the size, what is the currency of the bond issuance, who are the investors that Starbucks wants to target, what's the format of the bond issuance, as well as which jurisdiction do they actually want to issue the bonds in, and of the least importance, right, strangely and actually interestingly, is actually what is the internal cost of operations for the investment bank to actually carry out this bond issuance process. So whereas the former factor on risk is not really something that technology can actually affect, but the latter four are actually factors that from a technology perspective can actually influence. So for example, using the blockchain-based technology, using the STACS blockchain, can we actually make these different processes faster, better, cheaper? So some of the perspective that the banks actually take, right, and it's actually quite interesting to see the different perspective that they take. So for example, some banks, right, will actually approach this from an internal cost perspective. So the very last point over here, right, where they look at, can they actually lower down the own internal cost of bond origination, such as subsequently, right, they can actually provide a more competitive fee to the issuer. So for example, if right now, let's say Kenanga were to charge, let's say Starbucks, if they were to issue $300 million worth of bonds, and Kenanga will charge them, say, 40 basis points, for example. Internally, Kenanga will take on internal cost of 20 basis points, so they will earn that spread of 20 basis points. Now, if they were to use this STACS blockchain technology, then can they lower down their own internal cost of bond origination from 20 basis points to, for example, 10 basis points? And then now there's 30 basis points that they can play with. The spread is now bigger. So, for example, they can charge Kenanga a smaller fee while being able to take on some of the profits themselves as well. As an extension of that, you would notice that, for example, for most bond issuances, if it's below $300 million notional amount, the investment banks actually don't want to touch these bond issuances because they will actually lose money on these bond issuances. So using blockchain-based technology, again, we are seeing, is it now from a technology standpoint, from an operational standpoint, can we actually support bond issuances of $10 million, of $100 million issuances? That is always something that most of the investment banks that we actually work with are actually interested in finding out. Now, another perspective that one of the investment bank has actually taken in Philippines is they're looking at it from a financial inclusion perspective. So could they, for example, fractionize some of these bonds and allow for more retail investors to actually come in? So whereas for a bond, right, for a traditional bond right now, the minimum buy-in is normally upwards of $200,000, which probably means that most of the investors that purchase into these bonds are institutional investors or high net worth investors. And as a result of this, right, because of the high kind of barriers to entry over here, most of these investors actually hold to maturity most of these bonds, or at least in Singapore, that's the general industry consensus. Now, on the other hand, if you are able to reduce down the cost of bond, reduce the minimum buy-in from $200,000 to, for example, $1,000, then could, for example, more retail investors actually come in. And with more retail investors that come in, with more speculative intent behind coming in to purchase the bonds, could that then spark additional liquidity in the secondary bonds market? So that's also another perspective that one of the Philippine banks that we have been working with has been exploring. Other things like, for example, automating the asset servicing, that's something that's pretty much straightforward, as well as process re-engineering. Can we use new technology to undertake new processes that previously we were not able to? So as a very high level example of what I mean by that is that right now, if I were to issue a bond, for example, let's say that generically, these steps will be steps A, steps B, steps C, and steps D, right? Using new blockchain technology, can we streamline this entire process from A, B, C, D, E to something like A, C, and E? Or for example, can I just jump up entirely or come up with a whole new process of instead of A, B, C, D, E, it becomes something like an F, G, and H, which is a lot more streamlined, which provides a lot more value add for the different kind of stakeholders that's involved in the ecosystem. So that's our approach towards bonds, as well as some of the different perspectives that the different investment banks that we have been working with have actually adopted. Now, if I were to go to the next use case, that is on post-trade on blockchain. So how this conversation started out was that it is actually quite very much linked to the earlier use cases of bonds, right? Whereby initially, this use case over here is very much focused on primary markets activity, which is where you can see over here, for example, cost of bond origination, fractional ownership, etc. These are all very primary markets activities. But subsequently, some of the exchanges that were involved in these projects over here, they also began to look at it from a secondary market perspective. So, for example, being that if you look at across the general landscape, you can see that a lot of the stock exchanges, they are increasingly looking at post-trade as a huge driver of liquidity. This is the reason why a lot of the stock exchanges, especially in this part of the world, they have actually been upgrading their post-trade technology systems. A very good example would be, for example, the ASX in Australia, whereby they have replaced their CHESS replacements, their CHESS systems with a blockchain-based technology. Similarly in Hong Kong with Project Synapse, similarly in Singapore, for example. So the view over here is that post-trade is increasingly being seen as a driver of liquidity. Now, we have always taken the view that blockchain can also be a post-trade platform. So, for example, over here can, instead of us saying that the blockchain is actually replacing the CSD, could the CSD itself actually be deployed directly on top of a blockchain? When I talk about things like the clearing and the central clearing counterparties, for example, the clearing houses, can they also be deployed onto a blockchain? And can this then facilitate and increase the velocity of the liquidity over there? On a kind of related point over here, we also get things from that an exchange could, with new technology, actually undertake multiple roles. So an example of that is that if I look at the crypto world right now, right? If I look at Binance, for example, as an exchange, Binance actually multiple roles over here. So Binance is first and foremost, of course, the exchange over here, but Binance also take on several different roles, like being a custodian, being a broker, and also being a CSD, being a central securities depository, having the record of all the ownership of investor holdings at any one point of time, right? Now, if you were to take that same model, crypto model, can we then apply it similarly to an exchange? So being to say that, can the exchange not just be an exchange, not just be a CSD, not just be a clearing house, but can an exchange also take on several different roles, like a custodian, for example? Now, we don't think that an exchange can actually take on the role of a broker in the sense of crypto world, because we think that there is a huge conflict of interest over here. An exchange being a broker can actually front run other users on the exchange, so we don't think that from a regulatory perspective it actually makes sense. But nonetheless, an exchange can actually take on the role of a custodian. And if the exchange were to take on a role of a custodian, can they then touch on other business use cases like asset servicing, for example, which is typically something that a custodian would undertake anyway. So this is kind of blurring the lines between a typical CSD, a clearinghouse, as well as a custodian. Can we merge all of these different functions together using new blockchain-based technology? So that's something that we've been exploring with a few different exchanges, one of which is in Asia, but probably not realistic for me to say which exchange it is, being that in most nations there's only one exchange. So if I say the country, then you will definitely know what that exchange is. And then subsequently, we also get can we have global linkages and market harmonization? So for example, if I look at Europe, right, Europe has a very conducive, very connected financial markets ecosystem because of the Eurozone. So there are things like, for example, the CSDR, the Central Securities Depository Regulation. There are things like the Settlement Finality Directive. And all of these different directives, right, actually essentially creates a very flat, a very harmonized market structure in Europe. But the thing is that in Asia, we don't actually see that there's a lot of market harmonization. So even things like, let's say, trading hours, for example. The trading hours, for example, between Vietnam and Thailand and Singapore and Malaysia, for example, are very different. And you might think that 1 hour is a very small difference, but 1 hour in clearing and settlement is actually makes a very large difference over there. So using blockchain-based technology, using smart contracts, using business logic that we pre-program all the way at the very start, right? Can we then use this as an avenue to have a pan-Asia, pan-ASEAN market harmonization as well as a global linkage over here? So those are again different perspective of how different exchanges that we have been working with actually view the usage of new technology. Okay, so I move on to I think the third use case I'll share a bit on. So this is on an asset management use case, and essentially we are looking at how can we have trade reconciliation of exchange traded derivatives. How can we have straight-through processing for exchange traded derivatives? So the problem over here is that there are a few different participants within the ecosystem. So you have an asset manager. So theoretically, not saying that we are working with, let's say, a asset manager like BlackRock. So BlackRock would trade, for example, with the executing brokers, with the clearing brokers like JP Morgan, like Goldman Sachs, like Citibank, etc. There might also be a custodian involved. So, for example, if BlackRock actually outsources their back office custody to somebody like a BNP Security Services or a Deutsche Security Services, so there could be, for example, a fourth party that's involved apart from the asset manager, the executing brokers, and the clearing brokers. Now, the problem with this asset manager that we are working with, again, not saying that it's BlackRock, but hypothetically, let's say that BlackRock does, they don't do a lot of trades every month, right? They do about 1,000 trades every month. But out of these 1,000 trades, right, 50% of these trades actually break. So 500 of these trades actually doesn't have straight-through processing. And because of these breaks in the trades, right, then there's a need for manual fixes, there's a need for manual reconciliation. On average, it takes 4 man-hours every day. So that's about half of your working day, to be honest, to fix all of these different trade breaks. And the whole reason for this is that there's a lot of different silo systems, there's a lot of different processes that they are using. So for example, let's say BlackRock, for example, could be using Aladdin, which BlackRock created anyway, right? But whereas for the clearing and executing brokers, they might be using a whole different new set of systems altogether. And because these systems essentially are not talking to each other, so because of that, it creates a lot of friction, it creates a lot of silence over there. So the project that we have over here is that we are actually working together with the asset manager as well as the outsourced back office custodian. So that pretty much narrows down the number of asset managers in Singapore that actually outsources their custody functions. So we are looking at how can we reduce significantly the number of trade breaks that we have. How can we have automated trade matching? So for example, can we even have same-day trade matching between the clearing and the executing brokers? And subsequently, can we then connect together all the asset managers, all the custodians, all the executing and clearing brokers onto one single shared ledger, one single shared repository? So this is in fact where we are at the moment. In phase 1, we are looking at how can we have significant breaks reduction. In phase 2, we are looking at how can we have higher straight-through processing in merchant settlement. And in phase 3, we are looking at a much larger network effect. So this is very much a very industry focused project whereby we are looking at how can we connect together various participants of the ecosystem onto one shared repository. Okay, so pretty interesting project. Unfortunately, I'm not too involved in this project, so can't share too much on that. Now, in terms of how we actually deploy the STACS blockchain technology, right, is that if right now we look at the current processes in the capital market. So if let's say I have a generic digital asset like a digital bond, what happens is that I will issue that bond. I'll help an investment bank, or rather an investment bank in the current process will actually issue that digital bond. Subsequently, the investors will come in, subscribe to the bonds, and then the investment bank will do the allocation. Once the allocation has been done, then there's the execution and distribution, and subsequently you have your settlement. And then for your post-trade, then you have your servicing and the reporting. So this is your current process. What we do is that we mapped out these different processes and put it into our technology modules, into our front-end technology module that we call Security. So ranging from digital identity, asset issuance, transfer, custody, servicing, and asset reporting. And all of these different modules are then hooked into the STACS blockchain technology. So as a kind of illustration, this is how it would look like. So on one side over here, you have things like your investment banks, your brokers, your custodians, your asset managers, and your exchanges. All of that hooks into our front-end platform using a managed blockchain service. And the blockchain itself, as well as the platform, are interacting directly with integrated with the financial markets infrastructure. So your SWIFT payment gateways, your security settlement systems, for example, for the FMIs, and on the applications and systems here, for example, your Murex, Omgeo, Nasdaq, or Aladdin systems. Now, this part over here, the part on the kind of right side, central to the right side of the screen, would represent what happens if we use a managed service. But nonetheless, if an exchange, if a huge dominant exchange, they can actually deploy the entire STACS blockchain by themselves. So meaning to say that instead of a managed blockchain over here, the exchange itself actually owns and operates the entire blockchain. A investment bank could actually operate the blockchain, and same for a custodian or even a country, for example, that we are working with in ASEAN. So these different STACS blockchain will then subsequently be integrated, be interacting with the STACS blockchain that we ourselves are managing as well. So on a very high level basis, architectural basis, without going too much into technology details, this is the way that we have always been working with some of our existing partners and financial institution partners. Now, the very last part on the management team. So we always say that as a fintech company, there's a need to have both the fin side and also on the technology side. So on the financial market side, most of these guys, most of who have a lot more white hair and wrinkles than myself, most of them do come from the capital market. So for example, we have Jay, who used to start his career at Deutsche Bank, at Deutsche Asset Management, subsequently managing a 1 billion portfolio for the government. So I don't think it's 1 billion, it's a lot larger than 1 billion. And also took a postgrad scholarship with the MAS, where, for example, Nick Cowan, 30 years, and previously, I think in his last role was the global head of equities for ING before he left. We have, for example, David Teo, who used to be, I think, 20 or 25 years at BNY Mellon and BNP Paribas. That adds a lot of institutional domain knowledge towards the custody business. Andrew Pell, 25 years at UBS, career UBS kind of person. So in his last role, he was the head of futures, head of the CEO of UBS Futures in Singapore. We've got Joanne, for example, who comes from GIC and Aviva. Myself, I started my career at DBS on the APIs team, so on the APIs innovation desk, subsequently moving towards through Global Ventures, a $1 billion portfolio fund. So this is more on the capital market side. And then towards the technology guys, we have technology side, we have guys like Ken, for example, who started with Google and then subsequently moved to Nokia, Motorola, and then Jean, for example, who comes from Oracle. Of course, we are supported by quite a large team. This figure over here is a bit outdated. I think this figure is somewhere towards 54 or 55 by now. We've onboarded quite a few people over the past couple of weeks. So again, guys, there's more towards the technology side, blockchain developers, front-end, back-end developers, and also the project managers that are always an integral part of any projects. So I think that's it. A very brief, if this got brief, a very high-level overview of the projects that we have, as well as the approach that we have been taking, and very much looking forward to having some questions from the audience too.
Wow, that was crazy, CJ. Well, thank you so much. Okay, that was if anyone was like looking forward, okay, to a complete comprehensive look of what are the use cases that blockchain can be implicated in the capital markets, I think that you basically knocked that one out of the park. That was really great. So much you covered. I'm having difficulty as well. Okay, like where to start, because let's see what I'm still going to attempt to try this. All right. So here's what I wrote down. Okay, and let's take this as a guided. Let's take this as a one step, as a guided approach, and see whether we can do this together. All right. Sure. So this is these are the takeaways that I got. Okay. All right. These are some I have to get. Let's see. Right. Right. Okay. So we started saying that financial institutions are actively looking to blockchain implementation. You talked, okay, about what Hashstacs is not. Okay, Hashstacs does not touch cryptocurrencies. You guys do not touch payment. Hashtags is a protocol that services the capital markets, particularly your clients, okay, are stock exchanges, investment banks. And then you went on to show us, okay, a multitude, a melting pot, okay, of use cases. I wonder, you know, what are your operating times, CJ? I think you also probably operate, okay, 24 hours, 7 days a week, and 365 days a year in order to basically process all these things that are happening in the in your line of work. Okay, so anyways, cover one by one. Okay, and for those who are listening in, please feel free, okay, to ask your questions here. You look at the use cases, okay. If you have any questions, okay, at any particular use case you want CJ to elaborate further, I think that there's no better person right now, okay, to basically ask your questions with. All right, so you covered, okay, about use cases from central bank digital currency for the SGD. You covered the 5 different phases that that has already been implemented, and it's called Project Ubin. You talked, okay, about what are the different kinds, okay, of challenges, okay, exciting experiments. Do not know whether is it going to work, okay. Oh, it's so interesting now that it managed to work, and the sensitivity, okay, of the central bank, okay, that because basically what you're trying to do is you're trying to offload what the central bank is traditionally doing, but the responsibility there is like really, really high. So to be able to, for them to say to let go that portion of it, which is the rentas, okay, the equivalent, right? The results, okay, was how was the what is the response, okay, with that, and how recently was this experiment, Project Ubin? Is it still ongoing?
Yes. So you mentioned about operating hours, which I think is kind of related over here. It is no secret that the guys in Hashtacs, we do you do see us in quite a few different countries, even though we are of course headquartered in Singapore. I mean, Jason and Harper, you probably see how often I'm in Malaysia anyway. But the reason why we're actually able to do this is that we are actually supported by quite a large kind of supporting staff over here. So whereas we see that for most of the other guys, right, they actually don't really have a very large headcount. Hashtags itself doesn't really have a huge headcount, to be honest, if I view us vis-a-vis a traditional technology company. But nonetheless, having a team of 40 developers self-supporting us on a full-time basis is something that allows us to move quite fast. And also, you know, to be honest, a lot of this perspective, a lot of these insights didn't come from ourselves. It did help that, as I shown on the kind of team page over there, that most of us do come from the capital markets. It does help us to a very large extent. But to be honest, a lot of these perspective are things that, because we actually work with the financial institution, those are things that we can actually kind of see over here. Now, to your question in terms of, you were asking what's the reception towards central banks looking at whether we can actually replace rentals or the real-time gross settlement systems, for example. I'll tell you that the answer is that the central banks are not at all receptive to this. So they are not at all receptive to a third party actually coming in and providing the technology to replace them entirely. So meaning to say that if I were to be more specific, what the MAS or what Bank Negara would instead do is that they will actually take the technology itself and then use it. So they'll be the technology, they'll be the market operator in that sense. So they will use a new technology to replace their existing technology, but they probably wouldn't allow another company to actually come in and touch the process number. Yes, we don't think that that's something that they will actually accept, because as I've mentioned, this is something that's sensitive to the financial to financial stability. Now, in terms of when we actually did this, right? So if I go back to this slide over here, I don't think it's shown on my screen.
Let me wait. Let me just give me a second. Let me show.
Sure. Okay. So over here in phase one,
right,
I started in December 2017, if I remember correct. Phase 2 was quite fast afterwards. So that was somewhere around, I think, June of 2018, I believe. Yes, I believe it was around June of 2018. Phase 3 was also quite fast. That was also in 2018. That coincided. That coincided with the Singapore Fintech Festival 2018. So that was around November period, I think. Phase 4 was, I believe, in June of last year. That was in June of last year. I'm not too familiar with phase 4 because that's more towards the payment side, and I do think that payments is a bit more boring than security. Again, biased because of my line of work, but phase 4 is something that I'm not very familiar with. Phase 5 was actually quite recent. Phase 5 was in so we started the preliminary preparation work in July of last year. And then subsequently in September to October, that was when we actually built up the integration bridge within the STACS blockchain and with JP Morgan's Quorum. So this bridge over here, it took us about 1 month to build using APIs. So that started in September, and then in October, and then in 2019, we went live, or rather, technologically, we went live. We showcased this to already 60,000 people at the Singapore Fintech Festival. So this is where we are at this point of time. Phase 1 to 4, I can't really share too much insights on that, simply because Hashstacs were not involved in 1 to 4, only involved in phase 5.
Okay, all right. So what's that? We have some incoming questions already coming in already. Some people also say, I have to admit my head's spinning a bit from this presentation. It's quite mind-boggling. Okay, Suresh just commented, but it's all good. It's all good because I think this is going to be one of those videos where it's really going to be something that you have to rewatch once and twice and 3 times, okay, in order to catch, okay, really have a deep understanding. Possibly this might be a viral video among, okay, those people who are interested, okay, to understand blockchain implementation within the capital markets, and you want to actually like fast track, okay, this is the area of your focus, and you want to do that, okay, then this like one hour to 2 hour video would basically help you to do that, because there's a lot of golden nuggets in between here and there. Okay, into some questions. All right, let's start from the top. Okay, currently SME businesses rely on SWIFT, okay, system for cross-border monetary transaction, which takes ages to transact. Is there a better alternative to overcome this legacy system? I believe this is related to payments, right? But can you comment and help
Yes, good question. You are right to say that this is more on payments. So again, I'll put a caveat over here that specifically for this question, this is something of a personal observation on my own. It does not represent in any way the company's stance on this, because again, we don't really touch too much on payments. So Stephen, you are right to say that the SWIFT system is not really something that is ideal in this current climate. It is due to a very large extent the SWIFT providing their SwiftNet as well as their SWIFT ISO 20022 or their ISO 15022. It does provide, for example, a standardized basis for payments to be standardized. But that said, it does take quite a while, to be honest, to transact some of this. So we have been seeing some other payment networks that have came up recently. So for example, things like Libra, for example, things like, for example, RippleNet, for example. While we think that the idea of having a global payment system for connecting together all of these different jurisdictions are actually quite interesting. The problem with this is that domestically, right? If you look at payments domestically, it is pretty efficient, to be honest. Payments domestically is quite efficient. But as Stephen has rightfully pointed out, is when payments actually go overseas, when it goes cross-border, that is when there's a lot of issues. And the main issues with this is because of AMI and KYC reasons. So for example, right, if I were to bank with let's say CIMB, for example, in Malaysia, right? CIMB will actually check one time on my KYC status in Malaysia. Subsequently, if I were to take the money from CIMB Malaysia and send it to the same account that I have in DBS Singapore, DBS Singapore will actually check again a second time what's my KYC status. So these are all part of the reasons why there's actually a lot of delays when it comes to cross-border. So a lot of these challenges are actually regulatory related because of different nuances in jurisdiction. So that was actually why, personally for me, I felt that the concept of a central bank issued digital currency is not something that is actually innovative. So my take, right, on central bank issued digital currency domestically is that there is no use case over there. There is a small use case, I think, but it's very, very minor. But I think that the real use case for central bank issued digital currency is actually for cross-border, when it comes to cross-border payments. And the reason why I say this is when it comes to associations like Libra, when it comes to companies like Ripple, for example, right? No international financial supervisory organization will actually allow Libra or Ripple to actually become too big, because it poses a huge threat to monetary policy. It poses a huge threat to monetary sovereignty as well as financial stability. On the other hand, if we have central bank issued digital currency, if Singapore has a central bank issued digital currency, if Malaysia has a central bank issued digital currency, it means that they have already, to a very large extent, and assuming that these two currencies can actually interact with each other, it would mean that to a very large extent, MAS and Malaysia, MAS and Bank Negara Malaysia is actually quite cognizant of what are the regulatory aspects of cross-border payments. And in that regard, when a central bank actually takes that first step towards implementing this is when I think that we can actually have true cross-border payments. So in a very kind of roundabout manner, I think that that would be how I'll approach this question to you, Stephen. Again, apologies if I don't truly kind of answer that question, because again, I'm a bit more towards the security side as opposed to the payment side.
Sure. We have more questions. One question is asking, what are the main challenges for you to convince these traditional financial institutions to buy into your service, or to basically adopt? So
Okay.
your clients, okay, as what's that? Exchanges, stock exchanges, and investment banks, right?
Yeah. Yeah.
The main challenges for you to convince them to buy in.
I think we can probably write a manual on this, to be honest, and that manual will be pretty thick. So main challenges, we face a lot of challenges, to be honest. Things from an operational perspective, from a regulatory perspective. If I skip over regulatory challenges, because I think that is something that is going to be prevalent anyway. And if I were to talk about how we overcome regulatory challenges in Singapore, to me, it's interesting. To the rest of you guys, I think it will be probably quite boring. But I guess that the main challenge on our side, right, is there a business use case over there?
Yeah.
Okay. So if I go to one of the over here, right, on the different kind of projects over here, the main reason why, right, we actually focus on these different asset classes or these different kind of business functions over there is that we think that there's actually a business case over there, that there is a product market fit over there. So if you are able to convince the bank or the stock exchanges that, you know, using new technology, you can actually make things faster. And you cannot just say that, oh, we think we can increase efficiencies by 20%. What do you actually mean by you are going to increase efficiency by 20%? Does it mean that you're going to increase efficiency 20% in a fully hypothetical DLT environment? Because I'm going to tell you that if you take this approach and go to a bank or stock exchanges and tell them, I can increase it by 20% for you, the bank or stock exchanges will not listen to you, simply because it means that you have not taken into account their existing systems. So we are talking about the entire total cost of ownership of first the integration with the existing financial systems. And once you have actually integrated, then what is the efficiency that you can have over there? Bear in mind that when you first go live with a new technology itself, right, it cannot make things worse off than the current process. So you can't even see a J curve over here. Right from the get-go, it must be a kind of diagonal line over there. You can't even you can't even say that on the very first day I'll remove efficiency by 10%, but in 6 months I'll increase it by efficiency by now 20%. So there must be a very strong business use case. Over there, I think that if you're able to kind of look at this business use case, or at least from our perspective, we have been able to demonstrate this. This would be one very compelling reason to actually convince the institutions to come on board. The second approach that we have actually taken is a bit unorthodox. And the reason why we actually took this approach is that you see most of the people that sits on the team, right? Most of them were former investment bankers with investment banking mentality. So what do investment bankers love to do most? Well, investment bankers, they love to broker deals. They love to make deals happen out in air. So being a middleman, taking this thing, taking that thing, connecting it together and say, boom, we have a deal over here. And for example, one of the projects that we managed to go into a live implementation stage was actually based on this. So let's say that, and I'm not going to say which project within the bonds projects that we have over here, right? But within the bond case over here, one of the challenges that we always had was, can you find an issuer? Because if you have an issuer who is willing to put that bond onto the blockchain, it means that I can then take this issuer and go to any other bank and say, look, I have got an issuer who wants to issue a bond onto the blockchain. Do you want to help this issuer put a bond onto the blockchain? Because if you can do that, it means that essentially for this investment bank that you're going to approach, it means that it's new business for them. So if, for example, I know that Starbucks is going to issue bonds, wants to issue bonds, right? So I'll tell Starbucks, I'll convince Starbucks that they should actually issue that bond onto the blockchain. Subsequently, I take this knowledge that I have, and then I go to Kananga, I go to CIMB, and I say, hey, CIMB, Starbucks want to issue bonds on the blockchain. And because Starbucks is a client, so CIMB or Kananga, they got no choice. They have to support it because it's a client-driven demand over there. So again, this is more of a kind of investment banking approach that we have taken over there, very much because well, most of us do come from the investment bank. So I think that's also one of the approach that we have taken that was actually quite highly successful for us, especially for the bonds use case. So I hope that answers the question.
Okay. All right. Let's see. One more question is from, is Project Ubin for Singapore dollar similar to China's digital renminbi?
Yes. So I'm not very familiar with the PBOC digital renminbi in China. I'm not even sure if they're actually using a blockchain. That I do know that when they first started out last year, they did say that it was going to be a blockchain-based payments network. Subsequently, I'm not really sure if that's still the direction they have taken. But based on my understanding, there's a few differences. So in terms of the technology itself, I'm not really sure how PBOC uses what's the underlying protocol. For MS Project Ubin, right now, at least on the payment side, is on Quorum. I don't know if this is going to change in future because I can't speak for the MES. And an important caveat over here when I share about Project Ubin, this is sharing Project Ubin from our perspective. We do not in any way speak for the MES. So right now, for Project Ubin is based on Quorum. In future, I don't know whether it's still going to be on Quorum. It seems to me that there's an indication towards, but again, I can't speak for them. But in terms of the main defining differentiator over here, right, is that for Project Ubin, it is meant to be a wholesale central bank issued digital currency, meaning to say that retail would not actually touch a CBDC. Whereas for China, I think that there might be a difference. So in Singapore, it's a one-tier payments, one-tier account system whereby there's only one set of wholesale institutional CBDC. Whereas in China, I believe that is both wholesale and also the second tier is actually on the retail side. I'm not very sure, but I think that this could be one of the differences. I don't really have a lot of clarity on the China project. So that's my response to this.
Okay. Alvin Chong asks, okay, thanks CJ. Alvin asks, how would a Malaysia custodian be able to utilize blockchain to hold securities? Would there be challenges involved in terms of counterparty acceptance to use the blockchain?
Yes, very good question. So we always have to address, right?
Is the question clear?
Yes, it is. So we have to first address, right, when we issue a security, how do we actually issue that security? Meaning to say that when we issue a security on the blockchain, right, is it a security that's issued for the very first time onto the blockchain? Or is it a security that has been first issued in a traditional format and subsequently there's a similar representation onto the blockchain? If there's a secondary representation onto the blockchain, it becomes a bit more complicated. So I'll address that later. But if it's just the very first point, right, of issuing a native security onto the blockchain, then that's pretty simple. It just means that the Malaysian custodian needs to have a KMS system, a key management system. They can hold the private keys, they can store the private keys, and ensure that they are actually able to securely store the assets. So that's the first part. For the second part of if there's a digital representation onto the blockchain, essentially what this would mean is that you actually need an on-chain, off-chain connector. This also ties in a bit to your kind of second question over in terms of what's the counterparties over here. So meaning to say that if let's say CIMB were to issue $100 million of Starbucks bonds on the blockchain, for example, right? How would somebody like Kenanga that doesn't support a blockchain-based system, how would they actually hold that similar, hold part of that portion of this $100 million of digital bonds? The answer to that actually lies in the role of the custodian over here. So can a custodian, being a third party, neutral party with your existing service level agreements with your investors, with your brokers, for example, so investors being a broker or the issuer being Starbucks, right? The custodian must create the same similar representation, and every time the security on the off-chain layer, as well as the security on the on-chain layer, every time it moves, right, the custodian itself must act as the on-chain, off-chain connector to simultaneously move the security itself to mirror the pattern, the movement of the securities on either the on-chain or the off-chain manner. It's not an ideal scenario. We do recognize that it's not an ideal scenario. There have been a few different variations of how we can actually address this fix. It's quite hard for me to actually explain it without a kind of visual representation. But nonetheless, I would say that there is no there isn't a very ideal solution to that at this point of time, simply because again, we need to be cognizant of the fact that there have been a lot of traditional financial markets infrastructure that already exists as is, and this financial markets infrastructure is not going to go away anytime soon. So if this is where we are at, and the future state is let's say hypothetically a 100% DLT environment, or even in a more realistic environment of that all the financial markets infrastructure and the blockchain infrastructure is all connected together, that's probably going to take us about 10 years. In the interim, how do we solve this kind of migration or teething issues over here? The answer really lies in terms of the role that the custodian actually plays over there. Apart from that, it is quite an in-depth and advanced topic. So, Alvin Chong, if you would like to continue this conversation offline, I'm more than happy to.
Alvin has another question. He asked the question, how receptive is the Malaysia Securities Commission towards the idea of bonds on the blockchain?
Okay, so I am not sure how much I can share to this. So without saying whether or not we are working with the Malaysia Securities Commission, I would say that from what we've been seeing, in terms of the conversations that we have with the Malaysian SC, this idea has not been fully discounted. Whether or not this moves towards again, I don't think it's appropriate for me to talk about it at this specifically in the context of hashtags. Sure. If you check back with me, I'll probably give you an answer on that. But nonetheless, if I look at what Malaysia SC has been issuing in terms of their guidelines to digital assets, as well as their IEO framework, based on what I'm seeing, reading between the lines over here, I do see that there is reception towards SC taking this approach. It is also one of the reasons why SC has first came out with Project Castor in the first place. Being that Castor was focused on P2P, I think equities markets, if I'm not wrong. Yes, I think it was P2P equities, prop fund, CF platforms. Yeah, and the pain point that Malaysian SC was trying to solve over there was a lack of liquidity. So their view was that if we were to put that, if we were to tokenize the equity shares, put it onto the blockchain, would this in any way help to improve the liquidity over there? Now, if I were to draw parallels between a bond having very little liquidity in the existing bonds marketplace, which is a bit similar to the equity crowdfunding. Again, not really a kind of apple for apple comparison, but nonetheless, if you take the kind of same theory over there, I would say that again, not in a Hashtags context, but just based on purely a third party, neutral party over here, Malaysia SC has been looking at that project. Although I would say that again, if I look at the guidelines that the SC has issued in terms of the digital asset guidelines as well as the IO platform, there has been some inconsistencies in terms of the regulatory approach. So for example, whereas for digital asset guidelines, it was initially more catered towards cryptocurrencies, which in Malaysia is deemed as a security. Whereas in most other parts of the world, with the exception of I think the US and China, in most parts of the world, cryptocurrency is not a security. But nonetheless, right, in the guidelines to digital assets, one of the things that the SC was quite clear and specifically they mentioned was that a digital asset does not include a share or a bond or a debenture of a company incorporate. So what exactly does that mean? We will need a bit more clarity on, because my understanding is that for the IO platform, it's meant for securities, digital securities. But what about a digital? Is a digital bond a digital asset, or is it going to be treated as a traditional security? So again, a bit of inconsistencies over there, but nonetheless, I think that the spirit of innovation that I'm seeing over here is something that makes me inclined to believe that Malaysia SC is towards this idea of issuance of bonds on the blockchain. Again,
I have a question.
From a third-party view, not from a Hashtags perspective.
Got it. I have a question myself. I'm quite interested. Okay, there's a lot of talk about improving liquidity, right? opening up financial inclusion, allowing more retail investors to buy in, post-trade increased liquidity. Is that always a good thing? Okay, increasing liquidity, because if you invite speculation, wouldn't that say, for example, right now with the technology stacks that allow people to tokenize property, for example, right? And now because we have introduced liquidity, it's much more easier to trade. For example, imagine if, let's say, for example, Pavilion Shopping Mall is tokenized already, right? And is being traded, in a market where it is very, very liquid, then it will be subjected, to higher volatility. Is that always a good thing? Can you comment?
Yeah. So I approach this from two angles. One, in terms of directly addressing your question, and second, approaching it from a different angle on liquidity. So if I look at a traditional bond issuance or a traditional equity issuance, right? One of the things that a lot of people are actually not aware of is that there are certain stabilizing mechanisms that actually helps to look towards price stability. So this could be, for example, things like that a stock exchange could undertake. Things like, for example, circuit breaker. So if a share, if the movement of a share, if it declines by more than 7% or 5%, for example, depending on which exchange, which trading value you are traded on, then there's a pot. Okay. Strangely though, when a share declines by 7%, people stop to trade it. But when the share goes by 40%, nobody puts a stop to it. So, okay, but nonetheless, that's an observation. One of the things that actually prevents this 7% decline, apart from a kind of circuit breaker, is actually the inclusion of a market maker. So this is actually more prevalent, especially in the US, when it comes towards IPOs. So for example, when Uber goes IPO, right, there would always be an investment bank on the very first day when Uber is first traded on, I think they would trade on Nasdaq, for example. On the very first day, there will always be a market maker that monitors the price. And if the price falls too sharply during the very first hour or the first minute, the investment bank acting in their capacity as a market maker will step in and prop up the price. So that's an agreement that must be done between the issuer as well as the exchange. So for example, Nasdaq, we have certain market makers because it's also in the interest of Nasdaq as a trading venue that they don't want prices to decline too much. Now, if that would be from the perspective of if the price declines too much. Again, when the price goes up, I'm not sure why nobody complains, but I will kind of choose not to question that part. So that would be, in my sense, my direct response to your question. One of the things, though, that is actually quite interesting in terms of why you don't want too much liquidity in the markets, if I look at specifically for bonds in the context of Singapore. Okay, so most people would know that Singapore's monetary policy doesn't follow interest rate policy. It actually goes by exchange rate policy. Which is why the US keeps saying that, we are a currency manipulator, blah, blah, blah. I mean, guys, we already said that monetary policy is to influence the exchange rate. Of course, we are a currency manipulator, right? But nonetheless, to a certain extent, if there's too much of Singapore government securities, which are the bonds that's been traded, that's been issued by the government, so government debt, for example, if there's too much of these Singapore govies on the capital markets and if it's been traded too frequently, that, as you might imagine, may not be the best scenario for us, because then this would directly influence Singapore's monetary policy. Even though, again, Singapore doesn't influence monetary policy by interest rates, but as a kind of subset of that, it means that if there's too many Singapore govies out there in the market, this would directly impede our ability to actually influence our monetary policy. So that's a kind of second approach I will take towards why liquidity might not sometimes be very good for the markets.
Okay, I have two more things, that I'd like to ask, before, concluding this session. Okay, if you guys have any more questions, now's the time to ask, because we're going to wrap up already. So the first question, is on the social inclusion part. Moving from debt mortgages, to equity mortgages, where the bank, owns, basically a shared ownership, and then as you pay off, over time through smart contracts and that. Who is, you said that this is a use case that it is currently being implemented. Can you share where? Like, like who is implementing and who are the parties involved, because there are some people in the group here that are actually interested in that, and if they want to contribute in any way, how can they do that? Okay,
Yes.
what must happen? Who must be involved?
Yes.
I have a question after that, yeah, just to let you know.
Sure. So at this point of time, the shift away from a debt-based mortgage financing model towards equity-based financing model is not new. It's something that I believe has been done in Australia. Australia was one. I can't remember which city, but Australia has one. The Middle East, I think, also has one of these. I can't remember the exact name. I could find it. It's probably on one of the research papers that we have co-authored together. But I can't remember off the top of my head the exact city that's actually implemented it. It's not a country for sure. It's part of a country. It's just a city. Yeah. In terms of how you could be involved in that, we are actually looking a lot for contributions to this, because at this point of time, Project Kampong is still very much a research project. So you could, for example, reach out to Professor Rosalind at the University Utara of Malaysia. You could reach out to Professor Harina at the Islamic Institute of Banking and Finance, or if not, you can just reach out to me and I'll be happy to point you in the right directions.
All right. Okay. Harpreet?
Actually, first of all, CJ, it was a really good presentation. I really appreciate all the content that you actually have prepared. I actually enjoyed this presentation quite a lot, because I'm not from a financial background, but for the past few years, I'm building tech for the financial background. I'm actually researching and learning a lot of the stuff. And I'm always been curious about especially how basically the current institutions, and not only the current institution, in this case, how are we actually really bringing blockchain into financial products? Because yes, we have on the crypto side, or on the DeFi side, we can see like a lot of the innovations happening, but we also have really good financial products that have been existing from decades and centuries that actually have been really good, and how were they being influenced? So that's why I find your presentation today to be awesome. But coming back, if you really look towards it, I see that this is something today. It sounds more like a way to improve efficiency, or to improve, like the technology, the underlying technology. But it's slowly going to become a necessary move for a lot of stock exchanges and not only stocks, but a lot of financial institutes to basically look into and adopt this technology. So, but I just wanted your views on, what are your views on derivatives and kind of basically bringing blockchain as a technology as the base of stock markets, because one of the reasons for the formation of cryptocurrencies and Bitcoin was the one of the lack of transparency, the over speculation and manipulation of derivative markets back in during the period of 2003 to 2007, where you can see there was a huge number of derivatives that was actually been forming and highly speculated, which caused the whole market to kind of trenched. And then where we started to discuss about an alternate kind of blockchain platform. But where do you see that blockchain can actually kind of come in and kind of remove the barriers of like, or the issues that the current market is having? Because I see there's still a huge problem, especially in the derivative market, where often we lose view on what is the value of the underlying asset. And a lot of times the data is still public, but we don't get access to it. The data is usually kept in large silos where it's really timely to actually go and consume, but consume and learn what might be the value of that underlying asset. But often it's too time consuming, and the trade is so fast. People don't actually know, and they don't really take the bother of checking the underlying value, which I believe triggered the 2008 financial crisis. So kind of getting back to the question, I'll say that what do you see in the future with this technology, with blockchain in the financial market? One. Number two, how does it affect the derivative market and the stock market? Would you believe that this should be the underlying technology, or can this solve the current problem of the stock market? So I think these are like some of the questions.
Later, if he pass me a bill because of answering all these 3 questions, charge money one,
Okay.
Okay,
so
can you ask your 3?
Yes. Your first question. Actually, if you could put those questions onto the screen, because that would actually be easier for me to frame. So I think your first question was on what's my views towards blockchain technology in capital markets. Is that your first question?
Yeah, towards the becoming underlying technology towards the stock market and the derivative markets.
Yeah, sure. So I'll address for the stock markets part first before I talk into derivatives, because derivatives is a very interesting market altogether. It's a whole new different ballgame. But for stock markets, right, where we see the blockchain technology coming in is actually not on the trading part. So we don't believe that trading technology. So for example, your Nasdaq trading engines, etc., they shouldn't actually be under the blockchain. And the reason for this, right, is that if I talk about how do I create an orderly and efficient market, it's about how can I have liquidity, how can I accumulate a lot of different bids, a lot of different asks, offers, etc., put it onto a centralized platform and accumulate all of this and then subsequently match of them. Also taking into account that when you put a trade up, a lot of trades will subsequently actually be cancelled. So if I were to match all of this onto a blockchain, if I were to have trade cancellation onto a blockchain, it's not really something that's ideal in my opinion. So for me, that's my approach towards stock exchange. We don't think that the blockchain technology should actually be used for trade matching. But if it comes towards post-trade, so clearing and settlement, that's the part that we think has a lot of benefits over there. Because essentially the deployment with clearing and settlement is that you actually go through a lot of different systems. So for example, your investor talks to the broker talks to the exchange then needs to talk to the counterparty's broker and the counterparty as well. And then subsequently you go towards the clearing houses, your CCPs, and then afterwards then you have to go to the custodians. As you can imagine, there's a lot of different systems that's been used over here. There's a lot of different, for lack of a better word, intermediaries, even though I don't really like to use that word, because I do believe that these intermediaries do actually provide value. But nonetheless, you see that there's a lot of different participants, all holding different types of information. And because of this, right, because of the need to actually reconcile of these different contrasting, and I use the word contrasting very lightly, right? But to a very large extent, the different types of information, this actually impedes your ability to actually have straight-through processing. So this is where I think that the blockchain actually helps a lot. It's more towards post-trade clearing and settlement rather than towards stock exchanges. So I think that's that would be how I would view your first question. For your second question, you asked on the derivatives market and how have we learned from the lessons of the 2008 financial crisis, and how can we actually use new technology to implement this? So the 2008 financial crisis got sparked for a variety of different reasons, of which derivatives and your credit default swaps were definitely a key reason behind this. Where I think that the blockchain actually comes in is that it doesn't really touch the underlying asset. Because the blockchain at the end of the day is that if the data that comes in is dirty, then you essentially have a dirty result that comes off it. I don't really think that we can have at least not for the next 2 years, next 2 to 3 years, we don't think that we can actually affect the underlying. But subsequently, if let's say that I were to issue $100 million worth of bonds onto the blockchain, and subsequently this becomes the kind of convention for me to issue bonds onto the blockchain, right? Then this would, to a very large extent, allow me to touch the underlying. Okay, so meaning to say that after 3 years, right, then a derivative of a security that's been monitored onto the blockchain, then yes, I do think that to a large extent, the credit rating itself could actually be supported. But again, if you look at how the credit default swap, a crisis came about in 2008, right, it was not because of a lack of monitoring. It was because to a very large extent, the investment banks were trying to engage in portfolio management, whereby they were trying to lump together a lot of different securities of junk status, and because there was a wide variety of this, they can say that, oh, there isn't a lot of correlation between this, so this is a very diversified portfolio. Because of that, the credit rating is a bit better. That by itself was something that the investment banks specifically exploited. Now, in terms of whether the credit rating of the underlying asset itself would be available to the end investor, I think that is actually something of a regulatory question. It's not something that I can decide that an investor is able to see this? And also from a business operation perspective, is the investment bank willing to let the users see this? To that, I don't really have a view, but I would say that using the technology, we wouldn't be able to support the underlying, to view the underlying at this point of time, because the securities, the underlying securities has not been mainstream populated onto the blockchain. But in a few years, perhaps. So I guess where the blockchain actually comes in for the derivatives market at this point of time is more towards, again, the clearing and settlement pieces. So a direct result of the 2008 financial crisis was on the Dodd-Frank that was implemented. And some of this, right, was also correlated to the developments in Europe, which was that subsequently all derivatives, or rather derivatives that were cleared on a central clearing houses, would have certain balance sheet efficiency. So meaning to say that, for example, I don't have to post so much collateral if it's being cleared centrally on a centralized clearing party as opposed to doing it OTC. We do believe that using blockchain-based technology, we can actually help to supplement the clearing houses in this aspect. So I would say that we would help to supplement some of the direct responses towards, from a risk perspective, how can we have better risk monitoring? How can we have better risk mitigation measures? But the underlying aspect, underlying asset at this point of time, that to me is a question mark.
I mean,
Okay.
coming to the 1 second, yeah. So coming to the derivatives point, so yes, I do agree with the point where you mentioned that a lot of the stock exchanges or exchanges would not use blockchain as their exchanging or their order book management system. Even if we learn from a lot of the successful crypto exchanges today, it doesn't make sense to use blockchain as the exchanging element. And decentralized exchanges have never really picked off because of the same reason, because of efficiency and a lot of it to do with usability, right? But when you looked into the derivative market, one of the main issues during this, what they call the financial crisis, was that one of the product, which is called CDO, collateralized debt obligation, was actually fitted in with assets, undervalued assets, or no, I won't say undervalued, underperforming assets, and credited to be high performing assets. And in this case, the credits was actually falsified and the market was speculated, which really caused a lot of the problems. But when we see discussions like centralized digital currencies moving ahead, we do assume that in the next few years, if the technologies are in place, if they are using blockchain, there might be smart contracts in place. Then we actually have better control on how the contracts that go as the underlying assets perform. And if we can get some visibility on that, then we can build assets above that and say that, okay, can we trade these assets, and can we have some transparency? Are that assets actually performing? And if that performs, then we can actually build derivatives on that and say, can we trade these derivatives? So I think this is where I think we are talking about 5 years in the future, but I think that is somewhere that we should be heading towards. And if we learn from the crypto market, it's already actually happening. Although the settlement, yes, is done on the actual blockchain, the trade doesn't happen on it, but you have visibility on the asset on the explorers, right?
Yes.
So I think that's something that we should learn from that area. Yeah, sorry, Jason.
Right.
All right, so we have about 5 minutes, okay, 5 to 10 minutes left. I do want to cover one more thing, and then I want to give CJ one thing as well, okay, because he's given so much to us. I want to give him the opportunity to get something in return. So the first thing, okay, is that yes, in a couple of days' time, not tomorrow, but on Wednesday, we are going to talk about a protocol called R3 Corda, right? R3 is also one protocol which is highly, how do I say, used in the capital markets. I'd like to get both your point of view, Harpreet and CJ. What, in your point of view, okay, is the role, okay, that they play, okay, versus STACS?
Yep, I'll go first. So on the technology side, I can't give too much opinions on that. If I give an opinion, it will be very high level, because firstly, we don't think that the basic Corda open source technology itself is fit for capital markets, simply because of the usage of the third-party notary. This is not my own quote, but this is a lot of the quotes that I've received, a lot of the observations that I've received from other stock exchanges that have used the basic Corda version. Now, if you move towards an enterprise Corda version, then you would actually use your own notary. That is from my understanding. I haven't tried it before because I don't have access to an enterprise Corda version. So that is what I would say on the technology side. Probably can't share too much details on that simply because I'm not a technology guy. But I would say that the key difference is actually on the business side, or at least from my perspective. So Corda itself doesn't really focus on capital markets. So Corda actually focus more on payments. Payments to us is not really capital market. So if I divide the functions of an investment bank, right, I'll divide it into trade and treasury, which will include payments, trade finance, etc., which is where Corda is super huge, super strong on. Corda's trade finance network, Contour, for example, that's built on top of Corda, Micropower, etc. Those are fantastic. But again, those are more focused towards trade finance, not so much towards the asset tokenization space, which is the part that I think Hashtags is a bit more focused on. So with the exception, I think, of the Swiss stock exchange in Switzerland, and I think a few other guys in Europe. I don't actually think Corda, and again, this is a biased view, right? And I'll be very much looking forward to the Wednesday conversation with Corda. But at least I would say that in Singapore, when it comes to asset tokenization, we've got the market share, at least in Singapore.
Okay, awesome. Okay, I just want to I basically throw this question out so that the attendees know what to expect. Harpreet.
I also saw a comment that R3 just partnered with Nasdaq. I would like to clarify that because the news release on CoinDesk was not reflective of what actually happened. So when they say partner with Nasdaq, it does not mean that R3 is providing the underlying technology for Nasdaq. What it means, if you read what actually the press release on Nasdaq side, it means that R3 integrated with Nasdaq. That is the difference over there.
Okay, just want to highlight to the community, right? Okay, that it's very important. Okay, that sometimes these articles, they are clickbaity. Okay, it's very important to actually read what they actually write inside. So just something to note to the community. Okay, yeah, Harpreet.
At the end of the day, right? At the end of the day, Hashtags, we are cognizant of the fact that we are a second mover in this game. We are pretty late to the game, to be honest. R3 probably came about in, I think, 2014, 2015. We came about in 2017, and we only went live in 2019. Because of that, right, we had some of the disadvantages of being a second mover in terms of, for example, marketing. The joke that we always ask when the banks ask us what's your weakness, we always say, oh, marketing is trash. That to a very large extent is still the truth. But being cognizant of the fact that because we're a second mover over here, we have the luxury of seeing what are some of the other mistakes that the other blockchains have faced and how can we overcome them. And also because of this, we are one of the strategies that Hashtags always has is in terms of how can we actually integrate, not just with existing financial markets infrastructure, but also with other blockchains. So for example, we have done integrations with Hyperledger Fabric. We have the cross-chain prototype that we've already created. We've also done the integration with Ubin that's been done on Quorum. And of course, we'll be more than happy to do the integration together with R3 Corda. But again, there needs to be a business case over there.
Okay. I think you're doing a fantastic job. CJ, don't worry. I think you're doing a fantastic job today. Yeah. Okay, the people who are feedbacking in the comments right now, okay, seems pretty good to me. Harpreet, yeah.
I think they
what to expect, okay, for R3 Corda.
I think if you looked into R3 Corda, and I think first of all, the whole week itself, everybody have their own unique selling point. There are technology sectors, because you have to see that everybody is trying to be the kind of technology that fit in everybody's sizes, right? That they can fit in every single use case. But what will happen ultimately, I will see, is that technology will start to optimize towards certain direction that are profitable to them, or they find that that might be the niche that they can serve. And they start to kind of really focus towards that direction. So currently, I think in the beginning, for not only for enterprise blockchains, but for all blockchains, people were finding the niche that they want. Because over time, you will have to optimize, you have to customize your solution towards solving that problem. And today, if you look into the discussion, you can see that everybody started to choose their battlegrounds and where they would want to focus on. And Corda, if you really look into their technology, I will say they're more focused towards platform. I will say STACS has more use cases being developed comparing to R3 Corda. R3 Corda is more trying to become the platform that build, like allow other people to build their product on it. But because them being an enterprise solution and being premium, they had a bit of that issue of really pushing it towards the market. So they started to facilitate a lot of the development, co-development, and also develop on their own, and became to build the use cases on their own as well. So there you see that they kind of overlap a bit with Stack and also as a platform player. But individually, the whole week that we're talking about, everybody is trying to solve similar problems, but with different approach, with different focus areas, with different solution. And I would not comment that one is better than the other. Everybody have their pro and cons. So if you want to choose which is the technology for you, you have to know what is the use case, what is the problem, what you're trying to solve, and then which technology will fit in best and what can they provide to you, what kind of service or what kind of support this technology providers or platform providers or product can provide to you. I think that is how we should look into it, and we should take these technologies. I think that's all.
Okay.
Yeah.
All right. Awesome. So thank you so much. Okay. Just before I go and wrap up and close, okay, today's session, CJ, okay, because you've given us so much, all right, I'd like to basically give you, okay, a chance to basically ask for something from the community in return. So there's around like 50 people, okay, per channel that we're doing, okay, 50 times each person has 500, okay, friends and whatnot. There's like 25,000 people network here. If there was like one, okay, so if there was like one friend request that came in through LinkedIn, somebody who wants to connect with you after watching this session, who would that be? Who would you want to get connected with?
Who would I want to be connected to in Malaysia?
Yeah. Anywhere. Like for example, okay, if somebody is, so one of the greatest things, okay, about running Enterprise Blockchain Week is that people, okay, we raise awareness, and then after that people start adding people on LinkedIn and stuff. What would be one LinkedIn request that you receive? It came from this company or that department. If there was one, okay, LinkedIn request that you'd like to see, what would that be?
That's interesting. I know who it will be. So if any of you is connected to Clearstream, the clearinghouse or the CSD in Europe, specifically the head of DLT, I think it's a gentleman called Jens. If any of you is connected to him, I would very much love to be connected to him. I guess that was a kind of I don't know a trick answer from me because they say anywhere in the world. So I'll choose Clearstream.
Very good. Okay, awesome. So with that, okay, I'd like to thank, okay, CJ, okay, thank you so much for spending, okay, your afternoon with us, okay, to share about Hashstacs, to share the use cases, okay, that has already been deployed, implemented, experimented using your protocol. Thank you, Harpreet, also again for Enterprise Project. Thank you, our partners, for supporting us. Tomorrow, we're going to be covering Hyperledger. Okay, and Hyperledger is also going to be quite exciting. Why? Because Hyperledger is one of the largest collaboration tools, I would say, that came from, okay, not only that is, I think it was the people leading it is the Linux Foundation, okay, but followed by a huge community, okay, of including IBM, Intel, etc., etc. Okay, so do come back, okay, tomorrow at 3 p.m. Same place, all right, here on the live stream, okay. For those, okay, who are cryptocurrency beginners in cryptocurrency, we do this weekly, okay. Bitcoin Malaysia does a Bitcoin for beginners. What is Bitcoin? Why does it matter? Why is it still around after 11 years? Come find out, okay, on 11 a.m. Same, but you need to register on Eventbrite so that we can send you the Google Meet link for that one. So with that, okay, that concludes for today. Thank you very much, CJ. All right, okay. I'd like to welcome everyone to now, okay, give us some feedback, scan the code, or type in bit.ly/hashtags_04May. Okay, give us your feedback. Let us know, okay, so that CJ can also know, okay, like for example, what are the areas, okay, that they have really gained value from the session and what could be better. All right, and once you do that, okay, the cutoff time, okay, remember it's we give it a day, right? It's tomorrow 6 p.m. After that, we'll be sending you your custom links, and then from the custom links, you paste your Ethereum wallet address, and you can get this very unique proof of attendance token that is recorded on blockchain that you have attended the session. So with that, okay, thank you. It's been fun. CJ, it's been fun. Alfred, thank you again. Okay, I'll see you guys tomorrow at
Thank you so much, guys.
3 p.m.
Thank you.
Thank you.
Bye, everyone.
And if any of you wants to connect to me, I'm always available on LinkedIn. Just LinkedIn me, search Chuan Ji, CHUANJR, and put hashtags. You should be able to find me.
Sure.
All right. Okay. Bye.
Thank you, guys. Bye.